Wall Street and Broad, where we have the stock market, the Dow, more to the point, a little bit north of 17,700. There are a lot of catalysts for this, not the least of which are housing-related stocks on the report of a surprising 16.6% surge in new home sales in April. That's an advance the likes of which we haven't seen in nearly a quarter century. Jared Levy on what to make of that. Jared, also, I forget, you're not only a good stock market guy, you're a pretty good real estate guy. You're invested in real estate as well, sell real estate. Yep. So to all those who are saying, well, real estate is sort of, fizzling out, I guess this is a distinct no to that, huh?
Yeah, so it's very difficult from an outsider's perspective to figure out what's happening in housing, because you hear home ownership is at a 30-year low. But when you look at the numbers and you look at the values of homes, you see a much different story. In fact, if you look at all the metropolitan areas, and by the way, this is something, like you said, I spend a lot of time on. I just flipped a house here in Dallas, 2 of them in a row over 8 months for 100% each. Not because I'm special, but because markets are hot. And a lot of the reason for this, Neil, is foreign investors. And perhaps this is a PSA for millennials, in that foreign investors realize, hey, I can come in, put my money in American real estate, it's a safe place. But the millennials aren't buying. That home ownership level at a 30-year low tells us that the average American is still scared. But hedge funds, foreign investors, they're buying, and there's no inventory out there.
Where are they buying? I mean, the argument is that it's either benefiting the upper end or just north of the entry end, because young kids, couples trying to get homes, they can't.
Right. They can, and the data is kind of flawed, right? When you look at the Case-Shiller Index, it uses the median or middle price of homes. So let's assume that everything below that, like all of the homes out in the country, which is a good portion of America's homes, they've pretty much stayed flat, right? But all of the homes in the metro areas where people live and work and where business is booming, those homes have gone through the roof, but the median just moves a little bit. So if you look at the average versus 2007 or 2004, we're actually about 30 to 35% higher now, Neil. So yeah, big cities, San Francisco, Manhattan, Dallas, Philadelphia, even Detroit, seeing boom. So I guess the lesson here is buy real estate. Don't be scared of it. And you know what? Buy Lowe's and buy Home Depot, because people that are living in their homes are fixing them up. They're either reselling them or they're staying there because they can't afford to buy, like you just said.
Well, you might be very good at this flipping thing, Jared, and all that. But a lot of people, when I hear that, it kind of reminds me of the height of the bubble, where people maybe not nearly as savvy as you with this stuff were doing so and getting creamed later on. Doesn't it worry you that it could be getting frothy?
The answer is no, and I'll tell you why. Back in 2004, home ownership was, 10% greater than it was now. But today, it's a different story, Neil. There's not a lot of crazy lending going on. Most of the deals we're seeing, or a lot of the deals more so, are cash. And they're cash either by Americans who have made money on their real estate, or, like I said, foreign investors or hedge funds. These foreign investors and hedge funds aren't going to want to go and just dump real estate at the first sign of a problem.
So let me ask you that. Would you invest in this environment? Would you be more inclined to invest in housing or the general market?
Yes, 100%. And be smart about it. I'm not just saying just go
housing over the general market.
I would 100% right now, and I think it stays more stable moving forward for the year.
All right. Thank you, my friend.